Good evening, traders. It is Christmas night. Everyone is now tucked away in bed, and it's a good topic to discuss today because Christmas colors, after all, are red, green, and gold for 2023, the coming year. Is it going to make a comeback? My sources say yes. But you can't talk about gold without talking about the dollar. And that's exactly what we are going to be discussing today. I'm going to discuss the dollar, gold, and gold miners, comparing all of them side by side. And I can tell you right now, gold is positioning itself for a breakout to the upside. But it is waiting for something. And I think it's waiting for that February 1st FOMC meeting upcoming. Okay? Gold has all of the tailwinds that I'm going to show you. I'm going to show you today. The 1 month, the weekly, the daily, the 4-hour, and 1-hour, all major time frames that I look at. And you are going to see the evidence showing that it has the momentum, it has the tailwinds, and that the dollar is basically looks like it's buying time. On borrowed time, it seems. Okay? And I'm also going to show you the inextricable link between the EMA, exponential moving average, EMA 50, and the MACD zero line as far as momentum goes. You will see that as well. So let's get into it. What you are looking at, turn on the pointer. Here is the dollar futures on the left. In the middle is gold futures. On the right are gold miners ETF GDX. Okay, this is the one. All three of these show the 1 month time frame. Let's get to the most important thing first. For the dollar, it is respecting the 1 week EMA 50 line, 104.44. Right here, as you'll see. You're going to see this on subsequent slides as well. But since this is the monthly view, I've drawn in the 104.44 EMA 50 line right there. It is respecting it. It lost support a short time ago, and now the EMA 50 1 week is serving as resistance. You're going to see more details in subsequent slides, okay? Now, as for gold, gold is respecting the 1 month SMA, simple moving average 20 line. 1803, that is the magic number right now. Okay? That's this gray line right there. Okay? You're going to find that if you look down, I know it's kind of hard to see, but 2020 is right here. So 2 years ago, when it came up like this and comes down, guess what line it bounces off of? Yes, indeed, the SMA 20 gray line. See that? It respects it here, bounced off of it, comes back down to back test it here. Let's go ahead and zoom in a little bit, just so you can see a little bit better. Okay, see that? Bounced off of it, comes up, back tests and touches the SMA 20 again, hugs it, loses it, touches it, wicks up. See that? Wick. It's now resistance. It pushes through it, but back tests down and fails the back test in 2022, all of 2022 basically. But look how it finds support at the EMA 50. Okay. Finds support. Actually, it went under it, consolidated under it, pushed back through, and now the SMA 20 is resistance. And that's where it's at today. Okay? Now, let's move on to gold miners, GDX right here. Okay. Similar thing with the dollar futures. It's respecting the 1 week EMA 50, 28.92 currently. Right there. See that? See how perfectly the EMA serves as resistance. It is serving as resistance. And it was respecting it Well, this is actually respecting both this whole time. Notice how all the patterns, all the monthly patterns, just either bounce off the SMA or bounce off the EMA. See that? And when it comes all the way down, it's coming up and finding resistance currently at the EMA. Okay, so that's what I wanted to point out. Now, let me show you something. Okay. Okay, here's where this is gold futures again. See, that's today. See how far it is, how far above the EMA 50 that it is. See that? So it came down, bounced off the EMA, and now is above the EMA. Notice the red MACD line is above the 0 line in the same orientation. So the EMA 50 is equivalent to the MACD 0 line, because the current price is up here, came down, bounced off of it, came up here. The MACD line is coming over here, coming up, and it is the same distance above the 0 line, equivalent to the same distance the price is above the EMA 50 line. Okay, that is the inextricable link between the EMA 50 and the MACD 0 line. Then when you really start to make correlations together, that, you know, it's bouncing off. In other words, it's bouncing off the EMA 50 line, serving as support, right? Keeping the MACD on the monthly in the positive above the 0 line. And it's curling up. So that's a bullish sign for gold, right? That's bullish. The fact that it's above the 0 line and curling up on the monthly, that's bullish. That's not bearish. Okay, that's bullish. If the trend continues in an upward manner, right? See, that's bullish. Okay, so let's compare gold miners GDX right here. Notice the price, its EMA, this is a monthly, its EMA 50 is serving as resistance, right? So it's in a little bit different boat than gold futures. But directionally, it's moving the same direction, right? It has the same patterns, price patterns. It's just a little lower, okay? So it's just below its EMA 50 right here, right? There's the close of the candle as of Friday close. So what do you got here? It's just below the 0 line, just equivalent to just being below the EMA 50, but it's trying to curl back up, right? Just like gold is. See, notice how the shapes of the MACD and the signal line between gold miners and gold futures, the shapes are the same, but it's just the orientation relative to the 0 line is different, right? Because here, see that? It's under the EMA, just under the EMA, and so is it's just under the 0 line. Okay, there's the inextricable link. You cannot divorce the two concepts together. They are married together. They are directly correlated. Okay, so now we're looking at the RSI. Here's, see that RSI 71 for gold futures, RSI 70 for gold miners. Okay, it's good. That's good, right? That's clearly not bearish, right? That's good. So basically, you know, gold futures is on the cusp. It's, like I said, it's been respecting this SMA 20 now for a long time, over 2+ years. It's been respecting it time and time again, as you can see here, right? No question. It's been bouncing off of it, or it's been serving as support. It's serving as resistance right now. I think it's just waiting. It's biding its time. When you look at the MACD also, it's waiting for February 1st, guys. A month from now, a month-ish from now, just over a month. It's waiting. I think it's waiting. So it is in a bullish position gold futures is. It's bullish because after this SMA 20 on the monthly SMA 20, there are no more lines, right? I probably have to go to like quarterly or something like that to find the next line. So yeah, it's waiting, and it's at the top at resistance. It's waiting. It's waiting for February 1st, in my opinion. It's waiting. Okay. I think gold miners. I mean, if gold miners can retake its EMA 50, which it's basically has the same pattern, right? It has the same pattern as gold futures. It's just below the zero line. Okay, but the RSI looks good. It looks just like gold futures. So if it can just reclaim its EMA 50, the weekly EMA 50, 28.92 gold GDX. Okay, you GDX guys, this is your number. Plot the 1 week EMA 50 and track to that. Track to that number. It's going to change over week to week, a little bit here and there, up and down. Okay, track to that number. That's your number that you need to track to. If it can reclaim that 28.92, reclaim meaning do something like this. For example, it's got to push above it. Well, let's pretend that this is, well, actually we don't need to pretend that is the EMA 50. That's what I'm talking about, reclaiming. Push up, back test, push up again. You got it. You've claimed it. You got it back. You have a trend change. If the price action successfully back tests the EMA 50, in this case 28.92, right here, goes up, successfully back tests, and it pushes up, that's a trend change. You now have a trend change. But so far, all year long, that's a negative. You do not have a trend change yet. You for GDX, I mean. Positionally, it's trying to get there. It's trying to get there, and it's a start, but it's not there yet. You do not have a trend change. And I can actually say the same thing for gold futures. You don't have a trend change. Because honestly, okay, so it came down, it bounced off the EMA, it's coming up, but now this is resistance. It's got to, for this to be a trend change, it needs to clear the SMA 20 like it did here. Clear up, but actually it failed it right here. Here's the back test where it failed. It needs to do something like this. Come back down, successfully back test, and then go up to have a trend change. Okay? So that's what I recommend that you look to, track to gold futures, the 1 minute SMA 20, GDX gold miners, 1 week EMA 50. Okay? Yeah, when we look at Dixie futures, dollar futures, that's tracking to the 1 week EMA 50, 104.44. And it is firmly, you're going to see that in another slide, firmly resistance. It's firm resistance. Okay? We'll get to that slide in a minute. But I think the dollar has peaked. As you see here, this is the monthly MACD. It is coming down. It is just a matter of time. I think quite possibly the February 1st FOMC meeting could be the trigger that really sends it down, like beneath the signal line. Could be. It could be. Okay? RSI not looking too good on the monthly. Down to 28. See that? Doesn't look good. Okay? All right. So that's the monthly. Let's go to the weekly. Okay. And let me zoom in. Let's start off with Dixie. Okay, weekly EMA 104.44 that I just talked about on the monthly. Here it is. I just drew that line in but here is the line, the EMA 50 line, the weekly. Okay? It is now resistance. It was tracking for the longest time above the SMA 20, the weekly SMA 20, this gray line here, but it lost that, and now it technically lost the EMA 50 because it's under it. And in the next slide, this is the weekly, but the next slide is the daily, and you'll see it. I'm going to show you more details. All right. So, on the weekly, look at that. Dixie's about to cross into the negative past the zero line. Not good. Okay? That's not encouraging. That's not bullish. Okay? You cannot make the argument that Dixie's going to rebound. RSI down to 13. Look at that. Look at that. Look at that. It's not even trying to get back up above the 20 line. It's just hanging out down here underwater. Okay? Right. So, 1 week for gold futures. Okay, here's futures. Look at this. Do you see how high above its weekly EMA 50 it is? That's actually quite bullish. That's quite bullish. Okay? But remember, as you just saw, it's hitting resistance on the monthly SMA 20. That's why you're seeing wick down, because it's right there. You guys just saw that slide earlier. It is right at the top of the resistance for the monthly SMA 20. Okay, but on the weekly, when you're that high above the EMA and the SMA, that's really bullish. That's this look is what ideally any investor or trader wants to see. For those who want to go long, you want this look that you're looking at right now. How high you are above the EMA, how high you are above the SMA, right? And then this is the weekly. See that? It's gold futures for the first time in a long time. It's now peeking its MACD head above the zero line. Okay? It's peeking. It's poking its head up. It's like, uh-oh, I think winter's over. So yeah, no, this is very strong. Look at the RSI. Oh, I have the circle over the number, but it's 80 something. 80, probably 81, 82. That's bullish, guys. See that? Look at the RSI. That is bullish. Okay? There's no other way to look at that. And no, this is very encouraging. This is the 1 week time frame, guys. This is not like the 4 hour and the 1 hour that I like to look at. This is the 1 week. Look at the separation here. Look at the separation. And now it's coming up like this. Whew. Yeah, that's what I'm saying. It's positioning itself, but it's waiting. As you saw in the previous slide, it's just hanging out there at the top of the SMA resistance line. The monthly SMA 20 line. It's just hanging out there. I think it's ready for February 1st. It's like, come on, man, bring it. Bring it. I've been waiting a long time for this. I think that's what gold is saying to the dollar. I've been waiting a long. Okay, look, right here. The weekly, you're about to cross the zero line, and you're about to go below the zero line. Come on. Polar opposite. You see what I mean? It's so a fellow YouTuber who I like to watch, the Maverick of Wall Street, He likes to phrase the question as, does the gold believe what the dollar is doing? What he's talking about is, they're usually opposites, right? Gold goes up, dollar goes down, dollar goes up, gold goes down. So he likes to phrase the question is, but does gold believe the dollar? It looks like the dollar is going down, but does gold believe it? Based on what I see in the MACD, yes, it does. It now believes what it wants to do. Because, you guys, this is the weekly MACD. You don't just U-turn on a dime and go straight down, or like a V-shape down, or a inverse upside down V. No. This is a huge momentum indicator on the weekly time frame. Dollar is not coming back, guys. It's not. It's already the dollar. Yeah, we'll look at it more on the daily. This is the weekly. It's still kind of like, okay, you can kind of see it, but okay. Let's check out GDX. Gold miners. Okay. The weekly, see that? It's resistance. EMA 50, resistance. Yes, resistance. So, it's It's got to push through. But I think should gold, which will likely go first, lead the pack, gold miners will likely follow, right? It's waiting for gold to go first, and then I think miners will follow after that. I think it will, because look at miners. Despite on the monthly being in below the zero line but curling up, look at that. You're about to reach the zero line too. And look at that zero line. And guess what? The EMA 50 line. Perfect. See what I mean? That's why I always been tracking to EMA 50 and SMA 20. And I track to both. I track to both. They're both important, but if I had to stack rank one of them, it's got to be EMA first, SMA 20 second. Okay? If I have to stack rank it, I'm always going to take EMA over SMA. Okay? But there you have it. I mean, it's ready to roll too. Gold miner's ready to roll also. It's just, but I think it's not going to make a move until FOMC next month. Okay? February 1st. In the meantime, I think it's just going to hang out right there. It's like, yeah, I'm just going to wait right here. I'm going to wait right here. See? Okay. RSI 60. RSI over here is like 80-ish. 81, 82. RSI 60. That's not bad. Anything over 50 is good. So I think it's just waiting. I'm waiting. I'm waiting for you to slip up, dollar. Gold miners and gold. I'm waiting for you to slip up. Okay? Let's go over to the daily. All right, here we go. Here's some good stuff here. So here's, okay, see that? The dollar futures right here. On the daily, this is the weekly. I drew that red line in. See how it's been respecting it. Support, support, support. Oops. Now resistance, trying to come back up to back test it. Can't do it. Can't pass the back test. Now you're going down. I think between now and February 1st, it's just going to kind of try to come back up again. Just kind of meander up. But I think come February 1st, it's going to collapse. I think the weekly EMA 50, 104.44, will prove to be the resistance line that the Dixie futures cannot overcome. It cannot overcome it. I don't think it will. Okay? In fact, let me show you what I think it's going to do. Right here, see this? Here's an example. Here's the EMA 50. Here's what it's doing today. It's over the next month, it's going to try to make this trek up like this. But come February 1st, it's going to bounce off. It's going to hit that EMA 50 line, and it's going to do this. Down you go. It's just eating time off the clock between now and then. I mean, you guys saw the previous slide, the 1 week. You're now about to touch the zero line and go into the negative, firmly into the negative. See what I mean? Yeah. You guys have probably seen the news that the bond market is calling the Fed's bluff on all these interest rate hikes. Like, whatever. You're not going to get there. And I think the stock market is starting to sniff it out too. Like, no, you're not going to do it. You say you're going to do it. You're not going to do it. But we'll see. We'll see. Okay, so now let's look at the dollar more down here. See that? See how far it is below. Well, this is the daily though. This is the daily. This is the 1 hour and 4 hour threshold points. But this is the daily. Look at how far below the zero line it is. It's just kind of slowly meandering up. You get this slow meandering upward pattern when you have a slow downward grinding pattern. So I think you can expect more of this, I don't know, maybe a sideways chop grind between now and February 1st. I think you can expect something like that. You're not going to see a V shape. between now and then. Nope. 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 Not gonna do it. Okay. So that's the daily. MACD. It just no. It's just no. This does not look good at all. I mean, you're like if you're at the swimming pool, you're 20 feet down. I'm sorry. This is deep below the zero line. Look at that. And you're just kind of meandering up. Turtles crawl back up. No. See that? I mean, RSI 46 on the daily and bending down, lower high compared to the previous. Yeah, that's just not. No. No. The answer is no for you, Dixie. Sorry. Okay. All right. Here are the 1-day gold futures. Look at that. And lo and behold, here's the SMA 20, 1803, the magic number. See? Okay. Notice here. Notice how the daily respects the monthly SMA 20 line. Up, rejected, up, rejected, up, pushed through the line, failed the back test, come back down, up, pushed through the line, failed the back test, come back down. Now you're trying to come back up again. You see what I mean? I think it's just playing this little, what is that, whack-a-mole, stick your head out of the hole. You know, it's playing this little game between now and February. I think that's what it's doing. So you can expect between now and February 1st for it to be right in this range of 1803. Right here. It's going to respect this. It is not going to just push through it and start going through before the February 1st. I don't think so. I would be surprised if it does. I mean, if it does, okay, that's good for you gold guys. All right? Just that's good. I would be surprised if it does. I don't think he's going to make. I think he's going to do this pattern for the next month until we get an FOMC decision. Okay, so I would anticipate just more sideways chop, right? In the 1803 range. Okay, that's what I think. See, look at this. Look at the MACD daily. I mean, look at how high above the zero it is. That's impressive. That's impressive. I wish like SPY and QQQ would do something like that. But, you know, it is what it is. Okay, notice, here's the current price today, daily, right here. Boop, right at the SMA 20 line, right? How high it is above the daily EMA 50. See that? Well, that's the same correlation between the MACD and the zero line, isn't it? Mm-hmm. There you go. Same correlation. Okay? This is very, very bullish. Very, very bullish. When you are that high above the SMA 20 and the EMA 50 on the daily, that's very, very bullish. But just keep in mind that 1 month SMA 20 has dogged gold. I don't want to say dogged. Gold has respected that line for over 2 years. And look what it's doing today. Respecting it once again. Okay? So, if you want to know what line to take, the 1 month SMA 20 for gold futures. That's what you should track to. Okay, 57 on the daily. Okay. See, it's hanging out right in this mid-range. Because first of all, it's at resistance. For it to break resistance, you gotta the RSI has to bust through this 80 line. Okay? Here, let's check this out. Like this. Here, let me scroll up from right here. I'm looking right here. See that? Let me scroll up. See what happens. Yeah, see, it just kaboom, exploded up way above the EMA 50. See that? Way above. Just yeah. Let's see what's up with this one. I'm looking at this one right here. Let's have a look. Okay. Well, it's big green candle. It's trying to push up, but it's way above again the EMA. See what I mean? So, I mean, all of these things just perfectly correlate. That's all I'm trying to say. Okay? So 57 is pretty good. It's hanging out in the 50s range because you're at resistance now. Gold futures is at resistance. For it to break through, it's got to go through the 80 range, the 80 line. It's got to do it. I think it's waiting, though. It's holding back. It's pulling punches right now. It's pulling punches. And when the time comes, I think it is going to say, all right, Dixie, this is it. Lights out. I think that's what it's waiting for. It's waiting. It's pulling punches right now. Okay. GDX, gold miners. See that? The 1 week EMA 50. Look at the red line. See how it respects it. It respects it. It's resistance. I'm sorry, it's support right here. Right, cams up, hits support, comes up, boop. Oop, looks like it gapped down. Right, yeah, it gaps down below the EMA, right? See, so it's going down, going down, going down. Finds some support, probably near its daily EMA, and then tries to come back up, right? So it is respecting the 1 week EMA 50, 28.92 currently. Okay, so but this is still above zero, and it looks like it's trying to want to flatten out above zero, which is bullish. Wanting to flatten out so that it can go back up. See what I mean? That's all. This is all bullish. If the pattern holds. Now if the pattern creeps down instead, okay, well, that's not bullish. But it still has bullish tendencies. And look at the RSI. Let's compare. So gold futures is 57, gold miners 55. Okay, that's fine. Well, you're right here. You're in the same kind of holding pattern, right? You're right at your weekly EMA 50. You're just right there. You're oscillating. You're consolidating. You're oscillating right there. I mean, look at that. You can't make that stuff up. Okay, so I think it's just in a holding pattern, waiting. Okay, let's get down to the 4 hour, shall we? Now let's zoom on in to dollar Dixie. Okay, this is the weekly EMA 50 that it lost. See that? It respected it. It was respecting it. See, coming down, bounce off support, failed, try to come up. It's now resistance, failed. Now you're stuck in your own Dixie Futures own 4 hour EMA 50 and 4 hour SMA 20. See that? It's wedged in between there. It wants to try to get back up to here, but first you got to get through your own wedge on the 4 hours time frame. And forget about the weekly. You need to get past your own wedge. You're now starting to be wedged in. And what's going to happen is, see this? Yeah, your own SMA 20 is going to squeeze you. It's going to form a funnel tip. And it's going to force you to make a decision. It's going to force you. That's exactly what it's going to do. And if that decision is, oh, well, I guess we're going down, well, there you have it. But so you see how Dixie Futures, I mean, okay, so to its credit, here's the 4 hour. It's about to cross the zero line, So, but I think from that pattern I showed you earlier, I think it's just going to slowly try to creep up to get to that weekly EMA. But then come February 1st, I think you're going to see a rejection. I think you are. Because I just showed you gold's pattern. And gold, to answer the question from the Maverick of Wall Street, gold doesn't believe Dixie. It's like, no, well, actually, gold is like, it's almost like gold is saying, I don't care what you do, I'm going up. I'm just waiting. Well, gold is seriously ready to break out to the upside. It's ready to. It's just waiting for something. Okay. RSI on the 4 hour, okay, 66. That's good. The 4 hour, it's about to cross into the positive. So, but I just think that Dixie Futures is just going to float up. It's not gonna boom spike and then boom take over the weekly and then just rocket up. No, I don't think so. The bond market's already calling their bluff. They're like, no, you're not. You're not going to do that. You're not going to get there. Okay. So, gold. Here's gold futures 4 hour. Okay, there's the 1 month SMA 20. See that? See, look at that. Look how it's just respecting this SMA 20 line, respecting it, respecting it, respecting it. Look at that. As of right now, it has yet to successfully back. Now this looks like a back test in the making right here. See this? That candle, that's a back test in the making. Is it going to go up, or is it going to just do more sideways chop? So keep an eye on that. Keep an eye on the SMA 20 1803. Okay, this is the 4-hour chart. Okay, here's the MACD on the 4-hour. See that? This, if it can, which I think it can. I mean, I don't see why it can't. If it can stop and then pivot up, that is a higher low than that, and that is near the 0 line. Yeah. I mean, why can't it? Everything I've seen so far for gold futures is bullish, right? It's bullish. It's not bearish. Okay? So, RSI, well, okay, you're going down to 38. That's, you need to be above in the 50 range. Okay? You need to be in the 50 range. So we need to see, it's possible that earlier when, actually, I think it was a weekly, it's right at resistance, right? Here's the line, like literally right here. Don't be surprised if gold possibly does come back down underneath of it, pulls back a little bit so that it can build the energy to come back up. You see what I mean? Don't be surprised. Or if it somehow even consolidates under the SMA 20 for a while, and then boop, and it goes up. Okay. So, here's gold miners. Day 4-hour. I'm sorry, 4-hour. Yep, 4-hour chart. See that? Look at the 1 week EMA 50 right here. This red line. Look at that. It's respecting it. But now you have on the 4-hour the EMA 50 4-hour right here, SMA 24-hour. See how they're they're coming together. Usually when you have that type of formation, oof, it's gonna do something. And look at this big gap down. Oh, watch out. Watch out. Let's see here. Did it fill the gap? Oh, it kind of filled it. Okay. So just be on the lookout. It's just positioning itself and waiting for something. 4-hour MACD above the 0 line. Look at that. There's some separation above the 0 line. That's good. Right? That's not bearish. That is not bearish. Okay? So, once again, the current price is over the EMA 50. The current MACD is over the 0 line in the same corresponding way. Okay. Gold miners, that's 55 RSI, a little bit better than gold futures on the 4-hour. Okay, that's good. All right. All right, here's the 1-hour slide. The 1-hour for the dollar. Here we go. Okay, so to its credit, the 1-hour is above the 0 line right here. See that? And it's just kind of horizontal floating, just hanging. Okay. Correspondingly, the price is over the EMA 50, just like the MACD is over the 0 line. See that? Oh, it's just hanging. I'm just hanging. Okay. I think it's just gonna make this glide, float upward. It's just gonna try. Because I think it was the daily. Oof, that MACD was way down there, just slowly meandering up, floating. Okay, that's all it's trying to do. I think it's just eating time off the clock, guys. Here's the weekly EMA. See that? It's just float up. Let's float up. Come February 1st, so boop, more down you go. Further down you go. I think it's just eating time off the clock. That's all it's doing. Right? Nothing ever falls in a straight line. right? So look at the RSI steadily going up, steadily going up. So very similar idea. 59, that's okay. 59 is not bad. Gold. Gold futures 1 hour. Okay. So here's the 1 month SMA 20 line right here. See how it's just right there. See how it just rockets way above it, only to fall right back down below it. And now it's coming back over it and hanging out right there again. See that? So this is your line, you gold guys. SMA 20 monthly, 1 month SMA 20. This is your line you need to track to if you want to see how gold is doing, because gold is respecting that line. Okay? 1 hour, okay. So it's just kind of meandering to come up. Let's see if it gets to zero line. Let's just see what's going on here. 34, yeah. That's probably explains. It's right at resistance. Is it going to get like a big move like that, like what happened here? I mean, I don't know. Something's going on here. I don't follow gold, so not sure what was going on here. That big move up, big move down. Is there more of that spoofing that J.P. Morgan got convicted or pled guilty to? Gold spoofing, rigging prices in the options market. You guys probably heard about that. So, okay, gold miners. Oh, kind of similar deal. Just see how gold futures is oscillating around its 1 month SMA 20. Gold miners is oscillating around its 1 week EMA 50. Okay, just hanging out. Look at that. So just but I think a move is coming, because anytime you have this is the 1 hour chart, the 1 hour EMA 50 here, the 1 hour SMA 20 here, and they're now converging on the 1 week EMA 50. There's a move coming. There just is. That's just what happens when you have these different convergences of different EMAs across different time frames converging like that. You're going to get a move. It's going to move. It almost forces it to. You know what I'm talking about? It's like you got to do something, because you can't be like what is it? When you go out to some event where you're like, so sir or madam, you need to move your car. You can't be parked here. You got to move, right? Okay. So, it's above the zero line, kind of going down. Let's see if it tries to flatten out, only to go back up again. Okay. So, regardless though, that's not bearish, right? The 1 hour, to be bearish, you need to be down here in this red line. Okay. That's not bearish. Okay. So I put out these numbers for you. For gold miners, 1 hour, it is negative 0.2. 4 hours, negative 0.4. For gold futures, 1 hour is negative 5. 4 hours, negative 7. Okay? That's what you look for bullish versus bearish tendencies. Okay? So, RSI 54 for gold miners. Okay. That's not bad. All right? And that's basically all I have for you guys today. If you would like to follow me on Twitter for more real-time tweets, feel free to do so. And please give it a like, share, subscribe, or click to be notified when I release another video. With that, I hope all of you had a very Merry Christmas, and I will talk to you again soon. Signing off.